Explainer. Right now, there is a seriously bold claim turning heads all across the financial world. We're talking about the idea that silver, yeah, silver, might be on the verge of an absolutely massive breakout. Like a momentum shift so big it could literally redefine the entire precious metals landscape.
And the magic number anchoring this whole conversation, $80. Now, if you followed the metals market, you know $80 is a staggering target price. It's huge. So we've got to ask right out of the gate, does this number represent a real, actionable signal, or is it just more of that financial noise designed to grab your attention?
Okay, let's dive into this. Section 1, the $80 question. Are we looking at a genuine opportunity here, or just market hype?
To figure out what's actually going on beneath the surface, we really have to look at the core challenge for investors today, and that's the constant, everyday battle between real market signals and distracting market hype. You know the drill. According to analysis from places like Dollariva, the absolute key to navigating this potential silver breakout is to ruthlessly focus on the underlying data. You've got to completely tune out the daily chatter. Just strip away all that emotion and look strictly at the structural changes happening in the background.
Moving right along, Section 2, the hidden market signal. We're looking beyond the price.
Now, this is where things get super fascinating. There's this specific, kind of hidden signal that a lot of casual observers totally ignore, but experienced investors, they track it obsessively. And that's momentum. Momentum reflects the true strength of a market. And the craziest part, it often moves before the price itself actually catches up. Think of it like a leading indicator, giving us a little peek under the hood at the market's engine before the car actually accelerates down the highway.
And that brings us directly to the analysis of well-known market analyst Michael Oliver. He recently noted, quite bluntly, that silver is approaching a powerful momentum shift. He's seeing that the current structure forming in the silver charts isn't just random static. Actually, these specific technical patterns have historically popped up right before major price rallies.
Which takes us to Section 3, the critical breakout level. Let's get into the actual mechanics of $80.
So what are the exact mechanical triggers we actually need to see to validate this whole bullish theory? Because a true breakout isn't just some emotional price spike, right? First off, silver has to actually break above that $80 level. But step 2, and this is absolutely crucial, is the crucible. It must hold that level on a weekly closing basis. It can't just casually touch $80 for an hour on a random Tuesday and then retreat, no way. Friday afternoon's close is the whole shebang. It's the ultimate test of conviction. And if, and only if, that strict condition is met, we move to step 3, triggering a strong bullish breakout. That weekly close is what literally proves the market has accepted this brand new valuation.
Okay, but it's that breakout triggers. Who exactly is stepping in to drive all that momentum? Enter the smart money. We're talking about large institutional investors. If silver manages to hold that $80 weekly close, these major players might just start entering the market aggressively. And because of the sheer massive volume of capital they control, their entry is what ultimately sustains the rally and really drives those prices significantly higher.
All right, Section 4, drivers of the shift. Time to look at the macro context. Because, let's be real, technical charts do not exist in a vacuum. Why are these massive institutional investors suddenly so desperate for safe haven assets in the first place? Well, it really comes down to 3 incredibly heavy macroeconomic forces. We've got inflation quietly eroding our purchasing power, we've got broad economic uncertainty, and of course, rising global instability. These real-world factors are actively pushing capital away from riskier bets and funneling it right toward recognized safe havens. And that dynamic creates a super fascinating setup between the top 2 precious metals. Look, gold is widely recognized as the primary safe haven. We all know that. But the data shows that when you compare it to gold, silver is currently considered severely undervalued by a lot of analysts. This perceived undervaluation, it's exactly why silver is capturing so much intense attention right now. Investors are looking at it and seeing massive room for it to play catch-up.
Let's hit the brakes for a second, though. Section 5, volatility and market risks. It is time for a reality check.
We really have to ground all this optimism in some cold, hard reality. Silver is historically notorious for its extreme volatility. I mean, false breakouts in silver are essentially a rite of passage for investors. A momentum shift can look incredibly convincing on a chart, draw absolutely everyone in, and then bam, suddenly reverse course. We have to weigh the technical optimism of analysts against the stark, undeniable history of the silver market. It's a space where enthusiasm has to be really carefully managed right alongside the risk.
So the absolutely crucial question remains,
Could silver become the next big opportunity, just like those underlying momentum signals are suggesting? Or, given the market's pretty notorious history of head fakes, is this just another hype cycle? You've seen the hidden signals, you understand those strict $80 mechanics, and you know the macro drivers pushing the narrative. How you weigh that evidence is entirely up to you. Thanks so much for joining me for this explainer. Keep analyzing, and I'll catch you next time.